Increasing interest rates across big four banks, coupled with a low amount of wage growth in the system, we are headed into an area of uncharted waters. A lot of people concerned that have home loans about whether interest rates are going to absolutely take off. What does inflation mean? Is it transitory? Is it really transitory? Or is it just around forever? All of these questions are leading to uncertainty in the market. So what I thought would be a really good idea is to share some of my thoughts after we read some insights around what's happening across the market and share my thoughts around the overall picture for 2022 when it comes to housing market. We'll assess what's happening currently and what I think is going to happen moving forward into the next year. If you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. In this video, we're going to go through some of the insights that PropTrack has actually shared, a research company. We're going to use the report as a guide for the basis of our conversation today, and then I'm going to share my commentary of what I'm seeing on the ground floor with our buyers agency, talking to clients, as well as talking to agents and what sort of feedback we're getting from there. This will allow us to really assess state by state what's happening, and if you have property or you're looking to buy property, I think this is a very important video to watch because we're going to assess what's happening now, but also how do we prepare for what's around the corner in 2022. So this is the PropTrack Housing Market Indicators Report. Now, you can read a little bit about PropTrack there, but what we're going to do is we'll go through their executive summary and go through some of the graphs that they've shared as well, and I'll share my thoughts as well. Easing restrictions and the spring selling season supported strong activity in the housing market in October. Nationally, weekly sales volumes reached the highest they've had this year at the end of October, and volumes are much higher right around the country than the same time last year. Indicators of buyer demand show property seekers are extremely motivated, and search volumes continued to pick up in October, reached record highs in mid-October. Email inquiries remain around record highs. Now keep in mind, this is a little bit behind. So this would have been before the RBA came in and had that chat around inflation. Some of those numbers actually came out at that point. And since then, we've also had numbers around poor wage growth. So we can read some of the stuff here, but that's where it comes down to appropriating that with the up-to-date information. Strong competition from buyers have seen the median number of days on site, the median time a property is listed on realestate.com.au before we are advised it has sold, reached its fastest ever level. In October, the median time a property was listed for was just 31 days, a week full faster than in September. Days on site declined, particularly sharply in Melbourne as its lockdown began to ease and in-person property inspection resumed in mid-September. This is all stuff that we've already known. The market's heated. We know these prices are moving higher because there's more demand than the supply that's there. The rapid pace of sales is consistent with strong demand from buyers and a relatively limited stock of houses available for sale, particularly in regional areas. I love the fact that they mention regional areas because it is such a big part of Australia. Like, we only focus on the 5 or 6 capital cities and then nobody really talks about the regional stuff. And yes, you know, some people can come on the channel and be like,
Ravi's a regional fanboy.
But the truth is, I'm not. It just comes down to what numbers make sense. I'm purely logical in this. And if Sydney suddenly had huge amounts of rental growth and the rental yield actually made sense, then hey, maybe I would come back into Sydney. But for now, I'm sticking to the regional stuff. And there are some metro areas that I am looking at as part of our buyers agency we are helping clients with as well. Here is the weekly for sale searches. And we can see in April 21, we've seen the increase at the highest point. And we can see the decline here, which was in and around that sort of May 2020 when, you know, lockdown started getting introduced. And then we've seen the peak in 21 April. So a lot of people that were looking at selling in 2020 actually had to just forward their plans and, you know, push it away, kick the can down the road. And that's why we've seen such huge activity this year. But we've seen that rapid decline come through as well. Search interest continued to pick up as lockdowns are lifted. Search volumes in October were higher than in September. While volumes are up, growth has started to moderate nationally. Search volumes were up 9.1% last week of October compared to the same time last year. Although this was strong, this is slower than the 15 to 20% growth rates we have seen for the past few months. So it's fairly evident that even when you're looking online, you're looking at realestate.com, domain, whatever you're looking at, you can start seeing that some of the properties aren't selling as quick. There's a few more that are available that aren't under offer immediately. And this is basically what's happening. We are seeing a tapering off. We're seeing a slowdown of what we've seen as absolutely insane times. Does this mean that prices will go down? Does it mean that we're going to have an influx of supply?
No, I don't think so.
I think there's something bigger happening here. We are seeing that slowdown, but what we need to do is question whether this is market manipulation, is it outside factors that are affecting this market, or is it natural? Are we seeing this increase in prices for property? Are they natural, or is it driven by the fact that we have so much supply in the system of money? So when you couple that with the shortage of actual properties available, that's where we have that disconnect. Now, moving forward, are we going to see the tapering and the slowdown of the growth because of APRA coming in, the RBA changing his mindset on, interest rates, and the Big Four moving their rates? I think so, but we're about to find out. Now, in Victoria and to a lesser extent, the ACT saw a strong pickup in search volume towards the end of September. Both states changed restrictions in mid-September to allow in-person property inspections to resume as their lockdowns eased, motivating buyers. We can see that nationally, it's all sort of in line with each other. A couple of percentage points here and there is not going to be a huge difference. And we can see the remaining ones down here as well. Again, very similar. I think the outlier here is really looking at this blue line, which is ACT, and that's gone from the real highs to the real lows. That's probably had the biggest move here. Only New South Wales saw a moderation in search volumes in October, down 3.5% compared to September. Nonetheless, search activity remains very strong, indicative of strong buyer interest, with search volumes in New South Wales up 9% compared to the same time last year. I think the other part to it as well is, whether it's these guys making reports, whether it's finance, experts or editors, as well as other people on YouTube talking about stats. The real key here is that we are looking at comparing this year versus last year. But we know for a fact last year was not a normal year. So this is where it takes time to take into context the last 5 years to the last 10 years, but then also coming down to the logical side of things and really assessing that we've done things last year that we had never done ever in Australian property history. So we are truly in uncharted waters. Yes, last year I came out, made numerous videos about these are my thoughts, the writing's on the wall, this is what's going to happen. But I think we're headed into an area where there is some uncertainty. We don't really know how much the banks are willing to push consumers that have taken large amounts of debt and how much they're willing to push them to go, well, you know what, we can take a 3 to 4% loss on these people, have their houses repossessed, and then let the free market do its thing. We don't know how much they're going to push. And equally, at the same time, we don't know how much is left in the tank for a lot of these buyers that are overextending themselves, and then the potential for things that are going to disrupt the entire industry. Over the next couple of years, and I've mentioned this before, cryptocurrency is something that you want to pay attention to, because just like the internet, when it got introduced, people were like,
nah, screw that, I'm not buying clothes online. Who has a store online? That's not a real store. I've got a brick and mortar store.
The same thing is going to happen when it comes to blockchain and how smart contracts are actually going to change up the need for certain things in the industries that we work in currently. So does that have a flow-on effect where some people are going to lose jobs and then that gets reflected in prices sort of subduing and going down? These are very important points to actually think about. Now here we can see email inquiries to agents by property type nationally, and we've seen that that's had a steady incline. But if we now really focus on what's happening here at the end towards October, the last month or so, we are starting to see it slow down. A simple correction here is not a bad thing. Seeing corrections in a market is healthy. And that's why I think 2022 is going to be a healthy correction, not so much from an aspect of, we're going to drop prices by 3 or 4%. I think it's a healthy correction on expectations. This is the key, is that we don't want to just look at data and go,
well, let's hope for the best here.
We want to look at the narrative. We want to look at the emotional psychology of people and how they're buying and consumer behavior. When you bring the two together is when you're getting a really clear picture of what's happening. So we're going to see that correction in vendor expectations. They were expecting 1.3, they maybe got 1.2. That is the correction. We aren't seeing that,
someone bought for 1.3, but now they're having to sell a year later for 1.1. Now we are seeing that decline.
I don't think that's going to happen. Houses saw a small monthly increase in inquiries. Inquiries for units and land were down slightly, but remained more than triple levels in January 2019. Again, keep in mind that we had other things come into play over the last 24 months, which was home builder. A lot of these grants that came in to help people wanting to buy houses and land, as well as new builds as well. Inquiries from first home buyers remain high. Interest from home buyers remain high, but came a little off its peak in September, with inquiries down 2.4% month on month. Investor inquiry also remained very high levels and is more than double the level a year ago. Declared interest from buyers, typically owner-occupiers, picked up a little in October as well. However, the interest has cooled down from earlier this year. So what I'm sort of seeing here happen, and we can see it in these graphs clearly, is that we've seen 2020, uncertainty, people don't want to buy, right? And this is nationally. They're not going out there and going,
Yes, Ravi, let's go and buy.
we had some people that were buying with the smart money, and I kept saying, guys, this is when the smart people are buying. It was then after a while that we had certainty flip around at the end of 2020, start of 2021. We got absolutely smashed. The buyer's agency took off because we had so much demand. All of these people watching the videos were like, okay, this has actually played out. And now they've come in and gone,
Okay, I'm happier buying now that we've tested the waters, there's certainty in the system, and now I'm happy to go in.
but as those guys that were frustrated and they wanted to buy, they're sitting on their hands. Now we've seen that sort of slowdown, a bit of a correction, even on the inquiry side, from both owner-occupiers, being first home buyers, as well as the people that are, looking at selling their house and buying something else. Average views per listing surged to a historic high. Views per listing surged 9.4% in October, month to month, to reach a historic high. Average views per sale listings are now 46.4% higher than the same time last year. So again, we can see with this graph here that the average views per for sale listing is going higher. This is suggesting that we may have a shortage in supply because there's not enough properties, but there's an increase in people looking to potentially buy. So they might be now sitting on the sidelines and going,
Well, there's a bit of uncertainty again. I want to have 100% certainty before I move in.
this is what we refer to as analysis paralysis. So where you have too much information, you have too many things happening to go,
Well, maybe I won't make a decision at all.
and I know for a fact the people that I've been talking to, and I'm very grateful that, in this line of work that I'm in, I do strategy sessions every single week, that I can go and talk to numerous people from different industries, different backgrounds. And what I'm finding is that people want to have the highest level of certainty before pulling the trigger. The problem is that when you get that level of certainty, it's safe to say that everyone else is at the same level as well. So when you get a combination of that, you've got the highest amount of demand, they're coming in, and that is what is pushing prices up. We're seeing people now in the market actively looking, but they're holding back because there's that uncertainty of rates going up, inflation fears, and then you've also got wage growth fears. My counter argument to that is exactly what I was saying last year, is if you're scared about losing your job, wouldn't it make more sense to now diversify your income with going and acquiring productive assets rather than going, the risk is that inflation's around, so I'm losing the purchasing power of my dollar. Instead, I would be going, well, if you are losing the purchasing power of your dollar, go and put it into an asset because you know that you can protect your wealth that way rather than having it in your bank account because you're just purchasing like 10% less than you would have a year ago. Demand was strong right across the country with historic high views per listing in Melbourne, Brisbane, Adelaide, Canberra, as well as nearly all regional areas. Views per listing were down slightly in Sydney, but remained very high compared to last year. We can see the little bit of tapering off in some areas, but I would love to see what this actually translates to in the regional side of things. But this is obviously taking in both metro and regional. Sales volumes up sharply as lockdowns lift and the spring selling season supports activity. Preliminary sales volumes reached their highest levels this year at the end of October. This capped off a strong period of sales where preliminary sales volume rose by 14% over the past 4 weeks than in the prior 4 weeks. Now, we all know that spring selling season is the best time. That's most transactions happen at that point. We also, at the same time, had a lot of lockdowns, the restrictions eased as well. So a combination of those two things got us into a position where agents were really happy, making a lot of sales as well. And we can see the 3 different years there. So we've got the black being 2019, the blue in 2020, and you can see up here absolutely crazy with 2021 putting in record numbers. Now, the cumulative change in properties listed for sale that sold the first 44 weeks of 2020 versus the first 44 weeks versus 2021. Again, we're looking at numbers here that are very much skewed because we had a huge period of uncertainty last year. So I don't think that's a very accurate representation of what's happening. We would need to compare, say, 21 to 22 and possibly 22 to 23 to get a better idea of what's actually happened. Now, days on site declined sharply in October, and we can see that here. That slowdown has occurred across nationally, and that's also been the same thing here, barring one that's actually done quite well, which is Northern Territory. Again, Northern Territory is not a market that we actually operate in, so I can't really comment what's happening there, but all the major capital cities definitely have seen that slowdown there. Now, $1 million plus searches became the norm as prices surge. Surging property prices have meant that prospective buyers are looking at a higher price point. Throughout the combined capital cities, just under half, so 46.6% of searches, were for properties listed at a price over $1 million. A year ago, that share was 37.8%. A year ago, if you had a property that was worth, say, $850,000, if it went up by 20%, which was pretty much what happened across the board, you're now sitting in $1 million suburb. So we can naturally see why people are having to look at $1 million property. But what's really freaky is how 10 years ago, if you had $1 million property, you were a millionaire. Like, holy shit, that was big. Even if you're looking before that, like 20 years ago, $1 million for a property is insane. This is why I'm concerned with the lack of accountability some people have right now, where they're like,
Hey, I'm cruisy. It's all good, man.
so many people have already dropped off this video going,
This is boring. I don't know stats and graphs and things like that.
but the truth is that we're at a period where we don't really understand the true potential of price, especially for these types of assets, when you put it in relation to the devaluation of our currency and what that could actually mean in 10 to 15 years from now. It could mean that we see an average price of $5 million. But if your average wage growth hasn't existed and doesn't exist, well, you're really going to find it difficult at that point as well. And you're thinking,
Oh, well, unaffordability and I can't get into the market now.
you might not ever get into the market, and think about our kids and what they're going to have to face. The other thing I will make a note of when it comes to the $1 million plus properties and these suburbs, affluent suburbs, is that we have people that are going to now get the hit of the borrowing capacity limits that are coming in. It's easing, and it means that it puts pressure, downward pressure on these prices as well, because we have some people that aren't able to borrow. This is why I like, sort of working in that pyramid where at the bottom of the market, we've got the most affordable properties, but they're in good locations. They have the infrastructure, they have everything going for them. It's just at the more affordable range. Well, the thing is, when you have limitations on borrowing capacities and things like that, you really look into it and say, well, someone could move from $1 million borrowing capacity to about $900,000. But if you're buying properties in around that 350 to 550 sort of number, it doesn't really matter. In fact, it probably puts more pressure on those affordable properties and starts pushing up that medium house price. I know this has been a very long video and it's different to the normal content I have on this channel. A lot more research, especially looking at stats and things like that, go on in the background, especially for the buyer's agency and for some of these videos. But I thought it'd be really cool just to see it, and these guys had put something together that was quite easy to digest, so I thought I'd share it with you guys. If you are enjoying some of these videos, then definitely leave me a comment down below, and I'm sure to make more videos with graphs and stats because I know that you guys are interested in that. But essentially, if I was concluding all of my thoughts right now, I would say that comparing 2021 to 2020 in terms of search numbers and sales, I don't think it's a true accurate representation. Equally, you can't compare 2020-21 to previous years because that's where you're seeing a huge amount of growth purely on the basis that we had so much money being pumped into the system. So when I would look at a real calculation and real figures of what's actually happened, we're going to have to wait for 2022, 2023, and that's when we can start seeing some trends. It's very important to see pattern recognition across markets, and that is how we are able to go and figure out where do we go next? What happens next? If we're basing it on what we've seen so far, as well as my research previously, I think we're going to see a bit of a slowdown as uncertainty is in the system. But as we see increase in immigration, as we see that increase in people realizing that these changes aren't so dramatic, that interest rates going up by 0.5% or 1% isn't going to break the bank, then we are going to see that influx of demand come through for good quality properties. I still believe we're going to have higher growth in houses versus units, but it all comes down to the uniqueness of the property. I have a video on this channel that I'll pop up here where I discuss, apartments versus houses, and I know that a few of you guys have been asking for it recently, so definitely go check that video out. Thank you so much. If you've listened all the way through, definitely leave a like down below and share this with someone who is sort of panicking around what's happening. This is just looking at data, looking at my thoughts, especially with the background of running a buyer's agency with over 100 clients. We're transacting property every single week. So it gives us a good idea of what is happening on the floor and how we can adapt into the market for 2022. For me personally, I know in Q1 of next year, I will be buying property and I cannot wait because I can see what is coming around the corner. I'll catch you guys in the next video. Thanks guys.